Okay guys, Tuesday the 14th of November, and I've just been triggered into a short position on the FTSE 100 after this 1:10 p.m. engulfing candle. So we're just continuing on with this cautious trading approach that I've been going over in the previous few videos. Now, from last week, we risked £300 on the trade, which was slightly different from the first couple of videos. So I'm just continuing on with that in this live trade. Now, looking at this setup today, so first of all, this is a key level of resistance. What I'm trying to get across in this video really is, and with a lot of what I do, on not only on YouTube, but on Facebook, on Twitter, is getting across the reality of trading, what trading is a lot of the time. And a lot of the time, trading is very frustrating. And because it's so frustrating, you know, one of the main ways, well, I think at least, that people fail is because they start to get very frustrated. And that's what starts to bring on the mistakes. Because they're getting frustrated, they're not getting the setups they're looking for. They start to think, well, I'm just going to start taking this trade, I'm going to take this trade, this one's not perfect. And that's when the losses start coming in. So the market today pressed up into this key level of resistance. It's created numerous swings up here before breaking down. However, I was watching up here for resistance. First of all, I was watching at all these key levels. I was watching the swings, identifying the swings. I actually had, let me just delete this and put it in exactly how I had it this morning. So we had the market coming down into this level, producing another swing here, down here, another one here, and then down into here. So I was looking at this as multiple rejections, which is a bearish sign, obviously. I was looking for the potential short position. However, there was just nothing lining up with my trading plan, nothing giving me enough confidence to get into the market to look for the move down that did eventually come. And so I just had to sit on my hands and ignore the trade. And that's something that's going to happen to you, you know, multiple times through the week, through the month as a trader. And it's important to learn to deal with it and you know, maintain your discipline of following your trading plan. Because then when we got down here, this was also a key support level, and we had the market bounce here. It then pulled back once again, and then we've seen a very, very strong bullish move back up. So we got the reactions that I was looking for. We got the resistance and the strong sell down. We got the bullish touch and then the strong move up, but none of it was giving me the signals to get into the trade. And what I'm doing is when I'm coming to the trading day, pretty much every day I'm sitting down at the computer. I'm expecting and I'm prepared not to trade. So every time I sit down at the charts, my thinking process is that, okay, I'm going to look for potential setups, but most likely today I'm not going to get one, and that's absolutely fine. And it helps a lot. And what also helps a lot is if you've got other things to be doing rather than just sitting watching the chart. If you just sit and watch every single candle, you start to see things. You also start to get very, very bored. You know, this belief that trading is somehow exciting is it couldn't be further from the truth. A lot of the time, trading is incredibly boring. And if you're watching the charts, that boredom can get to you and you start to make mistakes. So have something else to do when you're sitting at the charts. You know, you see traders with like 6, 7 screens sometimes. I've got 2 screens. I only really use one to trade, and the second screen is so I've got space to do other things. So working, learning new things. It allows you to still be effectively trading and watching the market, but you're not solely focusing on the market. Because if you are only focusing on the market also, it's almost like you have a fuel tank of discipline and concentration. And if the more you watch the charts, the more depleted your fuel tank of discipline starts to become. And what happens is eventually it runs to empty and you start making mistakes. So by getting away from the charts during the trading day, focusing on different things, then only looking when something is starting to look like it is potentially going to set up, it can help you a great deal. So for this trade, as we started to make this rally especially, you know, we started to break through these previous strong swings here. My expectation was, okay, it's starting to break through that previous swing. Potentially we're just going to see a strong bullish rally here. But then we got the rejection. It's set up with everything I was looking for, and then only then do I start, you know, when I start to see this rejection here, I start to see the market testing at these levels, then I start paying attention to the charts, and I start looking, okay, am I getting a good setup here? We got the engulfing candle. I'm looking nearby. Where is that tight management point going to be for this cautious trading approach that I've been going over? It's sitting right at these levels, which is basically the central pivot from this double test before we pressed higher. And what I'm doing is I'm just using the exact same methods that I have been using in the previous videos. I'm not doing anything until we see the market come down to test these levels. Once we test these levels, I'm just going to consider the stop at break even, as I keep going over, with the cautious approach, although it hasn't really happened as yet in the videos. Very often you can just see the market touching the level, pressing back up and knocking you out at break even. And then we're only holding on to the positions that don't do that and give us the strong bearish sentiment, or if we're buying, the strong bullish sentiment. And those are the ones we want to hold. And those are the ones that we use to make our profit. Okay guys, so let's see how we get on with this trade. It's exactly what I'm looking for. I'm looking for this point here as the test, looking at this press higher once again, just adding to the potential rejection. So, we've had 1, 2, 3, 4, and potentially 5 rejections up here. Just adding a little bit of confidence to me for looking for a move down on this market. This, as I've mentioned, is the management point. First target would really be back down toward these lows and this zone right here. So around about 7,416 and lower. And then potentially closing partial profits at this level if we get there, and then looking to run the remainder further down toward the 7,410 level and lower. Okay guys, so I am out of this trade at the break-even level. I've just been continuing to watch. I wanted to see if it was going to quickly break down and make a strong bearish movement right after I got out of the trade. Entry for this trade. So basically at the break-even level, £8.20 made on the trade on the day. As soon as I seen the support at this level, as soon as we touched this level, I was just waiting for it to press back up, and then the exit was at the break-even level. With this type of trading, we're looking for, as I keep going over, the market to just continue breaking through and come down toward the target level. Okay guys, so we're now on Wednesday the 15th of November. So I wasn't talking through this particular trade purely because I was on a Skype call at the time. I was actually on a call to one of the Decisive trading admins. Now with this trade, well, first of all, with the live trade videos, I like to post up a trade that's either going to, reach the target or comes back and stops me out, rather than simply a break-even trade, purely because, I think it can be a little bit more beneficial if you are seeing how I'm looking at the full trade, how I'm working through the whole trade, how I'm picking the targets, etc. So for the trade, we just risked the exact same amount, that £300 on the trade. Once the market broke down below this level at 399, expectations, what we went over with subscribers, was for the move down. Now the market then came down, but it did hold at this potential level of support. We got a nice entry at 935. The market pressed up. The management point was at 382. Taking into account previous pauses, this whole section right here where the market struggled, this was identified as basically the potential level where if it's wrong, the market will come back against me. Following on with those cautious trading, or the cautious trading approach, just consider my stop at break even. The market started to break through. First target point was up at these levels right here. You can see the little previous swing point. Market came up, closed out 75% of the position, and then what I was looking for was how the market reacted at this zone right here. So if we had seen the market just breaking through, I would have watched at this, what is a sloping resistance line identified on the 5-minute time frame. And if we just continued with that nice strong bullish movement, we would have started looking toward those previous highs and taken the remainder of the trade off. The market basically popped up, started to reject here. As it started to come back down, I just closed out that remaining 25%. So £220.20 from the trade. So relatively good morning. Started the trade at 9:35, was finished by 10 AM. So relatively good setup. What I'm going to likely do is Just going to continue on with this cautious trading approach and showing you the exact same thing on these live trade videos, most likely for the remainder of this year, risking that £300. And then as we start into next year, what I'm going to do is I'm pretty much going to go back to what I used to do with these live trade videos right back at the start. I'm just going to risk the flat amount of £500 on the trades. I'll just leave the all of the positions open and clear. And then I will show you, the gain or the loss at the end of the trade. So rather than covering it up, I'll just go back to showing you the position sizes. Makes it a lot easier for me in terms of editing. I don't need to edit out all of the position sizes, etc. on the videos. Also makes it a lot easier when I'm posting it up onto YouTube. Saves me getting a lot of idiotic emails from people who are saying I'm trading £1 a point, £2 a point, etc. So I'm just going to start doing that most likely from the start of next year. For the remainder of this year, I certainly just want to continue on with this cautious trading approach, showing you how this can still work if you are trading a slightly smaller account. Really the account sizes that I consider to be, when you could reasonably start to expect to earn some sort of a living out of trading that would allow you not to work a separate job. And really that's, it's when you start to risk £200, £300 a trade. Anything below that, you're really, really going to struggle because, with your wins and your losses, with your drawdowns, it'd be very difficult to live off of anything smaller. Okay guys, so as always, I hope that was useful. I hope you've all had a good trading week so far. I'm James R, and thank you.